Hi guys, and welcome to another week of State of the Market. I am Marc Vittori, and I am joined again by my co-host Jennifer Boudol. And this week we have another jam-packed episode on the latest findings across Stockland's latest plans and the rapid growth of the Adelaide market.
Yeah. So Stockland is planning to expand its land lease portfolio after acquiring a substantial greenfield site in Melbourne's outer suburbs for $47.5 million. The country's largest residential developer has restocked its Victorian land bank after picking up a 13-hectare site at Thompson's Road in Clyde North, 55 k's southwest of Melbourne CBD, and part of the local precinct structure for plan identified for retirement living use. Stockland is now planning to deliver a 280-home land lease community, clubhouse and recreational facility within the master plan St. Germain estate and next to the future St. Germain Town Centre.
So guys, what this means is that the master plan development will be built under the Cyan banner, a Queensland lifestyle villages group it absorbed in a deal worth $620 million midway through last year. Based on the US land lease model, how Cyan operates a manufactured housing estate business model, buying a large plots of land and building houses which are exclusively sold to people aged over 50. The model allows customers to purchase their new home outright with no entry or exit fees and pay a site rental fee which covers council rates and includes access to modern community facilities. The Cyan business has continued to run separately to Stockland's retirement holdings and broader land banking.
Awesome. So guys, Adelaide has emerged as Australia's hottest capital city in the property market as interstate migration pushes prices to a new high. Elsewhere, however, demand has moderated as national auction clearance rates are well below last year's level, as CoreLogic data shows. In Sydney, just under 70% of 1,500 properties taken to auction this past week again were sold at 85% for the same period last year. Prices, however, remained strong as it was similar situation in Melbourne, where 1,500 properties were scheduled for auction, but just 68.9% were sold, a drop of 10% points over 2021, which is fantastic.
Very good, yeah, absolutely. So guys, CoreLogic did say that the auction clearance nationwide was 69.8%, the third consecutive week of being under 70%. Adelaide defied trend with 83.6% of properties taken to auction this week sold under the hammer. What we are seeing is interstate migration had a major catalyst in the increase of demand within Adelaide. We also believe the direction Adelaide is headed won't be slowing up anytime soon due to population growth in Adelaide, with returning from interstate and the eastern seaboard. Population growth is certainly fueling the Adelaide market. Additionally, we don't believe interest rate rises will have a big impact on the Adelaide market because it is coming in from such a low point in the market, and average borrowing capacities are usually sitting around 550 to 600 according to recent studies.
Good to know. Some exciting times to come on the back end of what has been a turbulent start to 2022. Nonetheless, a lot to look forward to with so much bounce back this year in certain market sectors. If you would like to know more about how we can help you on your investment journey through real estate, please get into contact with myself or Marc directly to gain a better understanding of what our capabilities are and if they suit your long-term goals. Until next week, guys, have a lovely week.
See you guys.